Let's take a moment, look at the disclaimer. This content is for educational, informational, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We're here just to spread the word of how BTA analyze the market, how we look at the market, and nothing should be taken as a recommendation. This is Rod from BTA, and we are known as the middle traders. Well, today, the market basically went nowhere. Okay? We talked about it over the weekend, and it actually went nowhere today. We talked about it over the weekend that the market was in a sideways consolidation. So let's look at it real fast. It's not going to be a long video because it didn't go anywhere today. So we still looking at the same thing we looked at over the weekend. This is a daily chart of the Dow Jones Industrial Average, the actual index itself, not the ETF. We normally look at the DIA a lot because that's what we trade when we want to go long or short the Dow Jones, right? But this is the actual Dow Jones Industrial Average itself, okay? And if you notice, all right, we are still within this sideways trading range, okay? Right here. We're still within the sideways trading range, right here. We haven't gone anywhere, okay? We haven't gone anywhere today. Today, we were still stuck. The market is still undecided, okay? So here's today's action right here. This is today's action. And the good thing, I guess, if we can say anything that's good about today, is that the fact that we held this red horizontal line, which is a weekly chart support level. All right, we held that. We traded below it for a little while, but we closed right on it. Okay, so we closed right on the horizontal weekly support level. That's good. We didn't break below it and close below it. That's great. Okay, but at the end of the day, we still is caught inside this sideways consolidation. So like we said over the weekend, okay, we put a horizontal line across the tops, right across this high here. Sorry about that. And we put another horizontal line across here. So the market has to decide whether it's want to go up or want to go down. Okay. But right now, we're moving sideways. We haven't gone anywhere. We're just fluctuating up and down within this sideways channel, okay? So that's the Dow Jones Industrial Average. So we just have to keep an eye on it. We have to monitor it every day. But until it makes a decisive move, whether up or down, we just have to sit on the sidelines and wait. So that's the Dow Jones. Now let's look at the Standard & Poor's 500, the actual index itself, the Standard & Poor's 500. And we see a similar picture, okay? The index, I'm going to zoom in so we can see it, is basically moving sideways, okay? We haven't gone anywhere. We're right on support. We traded down to this support level. This is a yellow line, so it's a daily support level. Our red lines are weekly support levels. So we traded down to the daily support level right here, and we bounced. But at the end of the day, we still stuck within this sideways channel, okay? So we have to see what happens tomorrow. If we can hold this support, like I said on the Dow Jones, that's the one good thing I could say about today, is that we held this support level. We didn't break down and break below it, okay? So that's the Dow Jones. That's the Standard & Poor's 500. Let's now take a look at the NASDAQ. Okay, but it's a similar picture. It's a lot tighter, but it's a similar picture. Okay, here's the NASDAQ. This is a daily chart of the NASDAQ we're looking at right now, the actual index itself, and we're going to expand it. And look what we have here, more sideways action. The only good thing I can say about today is that we held this long-term, this red horizontal support level. We held it. We didn't break below it. We still trapped between this overhead resistance level, this daily horizontal line, which acting as resistance, and the red line, which is support. Okay, but we're still stuck within this sideways channel. So we haven't really gone anywhere today. Okay, the market has went in nowhere. All right, it's still stuck sideways. So we have to wait. Let's wait and see what the market does. Okay, tomorrow. This is a waiting game. You have to be patient. Patience is the key. Okay, patience is the key. You got to have patience in this game. You got to wait for the market to come to you. Now let's look at this daily chart. And we're being very patient. We've been plotting on our weekly Bollinger Band strategy for almost a month now, right? So we're being very patient. Okay, so here's the Dow Jones Industrial Average, right? The actual index, but this is our moving averages on this chart. This is our moving averages, right? And look, we still stuck being squeezed between a downward trending 50-day moving average and the 21-day moving average. In other words, this red line is coming down. This yellow line, which is the 21-day moving average, is below price. So we're stuck. You see, we close right inside of here again today. We're stuck. We can't break above the red 50-day moving average. That downward trending 50-day moving average is a strong overhead resistance. And then we got the yellow line, okay, which is our 21-day moving average. And we got our green line, which is our 9-day moving average, acting as support right under price, okay? So we're squeezed in between a downward trending 50-day moving average, and we have a sideways to up 21 in the 9-day moving average, this green line, moving average line, that's trending up. All right. The volume did come in a little higher than last Friday. All right. But the prices didn't go anywhere. So we got to look out for churning. It's a thing called churning. All right. All right. Where we have higher volume without really having any upside price progress. Okay. We got to keep an eye on that. Today was a high volume, but the prices didn't really go anywhere. So for the Dow Jones Industrial Average, we're looking at our moving average chart. We're still stuck within price. That it's not going anywhere. All right. Let's look at the Standard & Poor's 500. All right. Let's look at the Standard & Poor's 500 with our moving averages on here. This is a daily chart of the Standard & Poor's 500 with our key moving averages. And as you can see, we haven't gone anywhere. We talked about that. But we held support of the upward trending 9-day moving average. Well, we have a 50-day moving average that's right above price. Okay, so, if this market moves up and runs into this downward trending 50-day moving average, and we don't have enough momentum, this market could get rejected and it can trade down. If it starts breaking below the 9 and the 21-day moving average, it might be a problem. All right. So right now, we're stuck between the downward trending 50-day moving average and the 9 and the 21-day moving average. Okay. We had our follow through day on the Standard & Poor's back here, right here on this day, on the 26th of May. Okay. But the follow through day didn't really give us no upside progress. That's our green light to start buying leading stocks and leading industry groups, breaking out of sound base patterns. But the market gave us our follow through day. It popped for a little bit, and then it just moved sideways. Hasn't gone anywhere. Okay, we had one good day on the follow through day, and that was it. And now we're moving sideways, and momentum is slowing. Momentum is starting to slow down. We got to see momentum pick up. The only thing I can say good about the momentum, it hasn't completely fell apart yet. All right, it's just slowing down. All right, here's the NASDAQ. We got a daily chart of the NASDAQ here, and it's looking like that DIA. All right. And that's a very dangerous chart. All right. So you got to be patient on this one. This is a very dangerous chart. We got a downward trending 50-day moving average acting as overhead resistance. Look at this green line. And we got this yellow line, which is a 21-day moving average right below price. We held support right on the 21-day moving average. Here's our 9-day moving average right below that. Okay, so we held support right at the 21-day moving average. We got a downward trending 50-day moving average, and we got a sideways 21-day. We squeezed in between these two moving averages. Price is squeezed in between these two moving averages as it moves sideways. Listen, it's going to break. Okay, this is actually what we like to see when we're in a nice bull market. Stocks moving sideways, consolidating kind of tightly. Okay, we want to see that, but we're not in a bull market right now. We are still in a bear market. We are still in a downtrending, overall downward trending market. So this overhead resistance, this downward trending 50-day moving average can be a problem. Okay, we can go up to this and get rejected and start another leg down. Okay, listen, the economy is still in shambles. We got inflation all over the place. All right, we got people now corporations starting to cut jobs. All right, interest rates is going to the moon. Okay, so you know what I'm saying? We got supply shortages. You go in Walmart, you go in the supermarket, ain't nothing on the shelves. Okay, and they're raising prices. Took my daughter to Chick-fil-A the other day, and I thought I was at Red Lobster. The price, the bill was so doggone high. Took her to Wendy's, I almost fell out. The bill was so high. Okay, listen, it's over the top right now. So we know the economy is in trouble. We saw the GDP last month came in and it's showing that the economy was contracting. Okay, the GDP was showing that the economy was contracting. If we get another quarter of negative GDP, that's a sign of a recession, technically. So we got problems. Today, Amazon did a 20-for-1 stock split. On Friday, Amazon was $2,447. Today, after the 20-to-1 stock split, is trading today. Amazon is $120 something dollars. Okay, for Amazon today. So what did O'Neill teach us? When excessive stock splits, we got to look out for excessive stock splits. Remember, Tesla did a big one, okay, earlier last year, or was earlier this year, or late last year. Can't remember exactly when they did it, but they just did one. Excessive stock splits, okay, is a sign of trouble. All right, but I digress. Right, I go off into a tangent just now. Let's get back to the charts. All right, so the Nasdaq is squeezed between a 21-day moving average and a downward 50-day moving average. That's not good. It's squeezed between these two moving averages. It's gonna make a decision. What we have to do is look for clues on which way it's going to go. That's why we did a little video earlier today talking about we got a cloud over our head. Okay, but Jamie Dimon said it's a hurricane brewing. I don't know if it's a hurricane or if it's just a little rain cloud, but I'm telling you, we got clouds of brewing. As my mother would say, Sherrod, you got clouds of brewing out there. Storm coming. Well, we'll have to see about that. If it's going to be a storm or is it going to get shiny, sunny days once again? Okay, here's the IWM, a daily chart of the IWM. Here we got our 50-day moving average, downward trending 50-day moving average, a sideways to up 21-day moving average. Price is squeezed right between it. So we see the price squeeze on the DIA, the price is squeezing the 50-day moving average and the 21-day moving average. Price is squeezing it down on the IWM. Okay, prices is squeezed between two major key moving averages here. All right, we have to be careful. Okay, on the DIA, you got prices squeezed between a downward trending 50-day moving average and a up trending to sideways 21-day moving average. Prices is squeezed between overhead resistance and support beneath it. The Qs, the Nasdaq, okay, is stuck between a downward trending 50-day moving average and a sideways to up 21-day moving average. It's squeezed between price. Okay. The IWM squeezed between a downward 50-day moving average and an uptrending 21-day moving average. It's squeezed between price. Listen, prices are at a reflection. Look, it's at a reflection point right now. We are consolidating sideways, getting squeezed between moving averages. I'm telling you, it's not going to stay like this forever. It's going to make a move. We have to look for clues on which way it's going to go. We have to watch the momentum, the acceleration, and the momentum and the acceleration of the momentum. We got to watch the rate of change of these stocks as they go forward. We're going to be doing some analysis on the rate of change. Okay, is it positive or negative? And we got to watch the volume to tell us whether or not the large institutional investors are buying in. Okay, are they putting money in to this market, or are they just moving sideways, sitting on the sideline, or are they going to take money out, which is going to cause it to collapse? All right, here's the Dow Jones Industrial Average, a daily chart of the Dow Jones, the actual index itself. And look what the guppy is showing us. The guppy is telling us we're stuck moving sideways. We trapped between the longer term red moving averages. Okay, here's the longer term red moving averages, kind of like that cloud over our head of brewing on the Ichimoku. And here's the faster, shorter term green moving averages. Notice that the magenta line of closing prices are stuck right inside of them. We have to get above it or below these moving averages. It has to do something. We're going to watch this, monitor it every day, and wait for the time to strike. It may come a time where we can actually, maybe we have to go long, or maybe we have to short it on the way back down to these lows. We'll see, but we're going to watch it. Okay, here is the Standard & Poor's 500, the actual index itself. And if we expand it, look at the guppy. We're stuck between the longer term red downward trending longer term red moving averages and the shorter term green moving averages. Look at the magenta line of closing prices, stuck right inside of these moving averages. Okay, and the two moving averages are coming together here. These faster green moving averages has to get above the longer term or get rejected and start heading back down. And then the magenta line of closing prices is going to have to make its decision, whether it's going to get back below the green moving averages and start testing those lows, or we're going to go up and get above the longer term red moving averages. So that's the key. That's the question. All right. That is the question. So now let's look at the NASDAQ, okay, on the guppy. And we got the same picture for the NASDAQ on the guppy here. We're stuck right inside of the moving averages, okay? And the green and the red moving averages are getting closer together. The longer term red moving averages are trending down. And the green moving averages, the shorter term, faster green moving averages are trying to move upward. But the magenta line of closing prices is telling you that the NASDAQ is closing. Its price is stuck sideways, not going anywhere. There's no momentum to the upside or the downside. It's undecided. We're moving sideways. We haven't gone anywhere for the last week. Okay, we haven't gone anywhere. So let's skip over straight to and see how many percentage of stocks are above its 200-day or below its 200-day. Are we seeing any major improvement there? Well, it's the same thing. It's not going anywhere. Only 21%. This chart is a daily chart showing what percentage of stocks are above their 200-day moving average or below it. Right now, this is the total U.S. market. This is a daily chart of the total U.S. market. And right here is telling us only 21% of the total U.S. market is above its 200-day moving average. That's still in bear market correction territory. That's not really showing any improvement. Only 21% of the total U.S. market is above its 200-day moving average. Okay, that's not good. That red line you see way up top here, this red line, this red horizontal line way up here is the 40 level. When you start getting below 40 level, that's our green line. That's our green light. Look out. It's problems, correction, trouble coming. The stock could be going down. Stocks could be going down. The majority of the stocks are going down, breaking below their 200-day moving average. That's a problem, all right? You don't want to see that, okay? So we're well below the 40 level. We had only 20% of the total U.S. market above its 200-day moving average. That's not good, okay? Here is the Standard & Poor's 500, the percentage of stocks above its 200-day moving average in the Standard & Poor's 500. And we at 33%. We still below the 40. It's a little better. We came off of those lows down here near 20. Only 20% of the total U.S. market above its 200-day moving average. But right now we at 33%. So like I said before, over the weekend, Do not get FOMO, fear of missing out. You have no reason to, because only 33% of the 500 stocks in the Standard & Poor's 500 is above its 200-day moving average. In other words, in an uptrend, trending up. Only 33% of them out of 500. That's not that great. And look at the NASDAQ. The NASDAQ is telling you only 18% of the NASDAQ is above its 200-day moving average. Only 18%. This is a daily chart of the percentage of stocks in the NASDAQ above its 200-day moving average. Only 18%. Okay? So the market is not going anywhere. We don't have a lot of stocks taking off and going to the moon. They're not really going into longer-term uptrends. The trend is still down. Most stocks are still below their 200-day moving average. The major indexes are moving sideways, stuck within the guppy. Look, you see it. Okay, we stuck and we squeezed between the downward trending 50-day moving average and the sideways to down 21-day moving average. And let's look at this NASDAQ one more time. Today, the NASDAQ did close up a little bit, but mostly flat. The NASDAQ was up 0.4%, 48 points. But look, this chart tells us the number of stocks hitting new 52-week highs and the number of stocks hitting new 52-week lows, hitting new lows over the last 52 weeks. Okay, look here. Up top, you got the new 52-week highs, only 65. Well, we still getting well over 5%. This little crayon line is the 5% level. We got 200 stocks today, okay, hit new 52-week lows. You see this, okay, almost 3 times more, all right? So you already see it. It's a problem. How my mentors just say, we got problems, Sherrod. We got problems, all right? We still hitting new 50. We still got a lot of stocks still hitting new 52-week lows, okay? We got over three times the number of hitting new 52-week highs. We got 3 times more than that hitting new 52-week lows, okay? So stocks are still trading down pretty hard. And the NASDAQ closed up today. Even the Standard & Poor's 500, it closed up today slightly, 0.3%, 12.99 points. But look, only 10 stocks hit new 52-week highs, 2 hit 52-week lows. Look, we haven't gone anywhere. The moral of this story right now, and we're going to stop right here, is that we haven't gone anywhere, okay? We today was another day of indecision. We haven't gone anywhere yet. So we have to just keep our eye on what's going on, keep our eye on the charts, keep monitoring the charts, and see what happens. If we look at our breadth, our go-to, okay, breadth indicator, the advancing minus the declining differential chart, okay, the invisible differential chart. This is a daily chart of the Dow Jones, and we want our green line to be above the yellow and the red, and above this horizontal red zero line. That's what we're looking for, right? We're looking for this green line to get above the yellow and the red, and get above this horizontal red line. Well, we got that, but now it's pointing down. Okay, and now the 50-day moving average, this red line, is sideways to down. Okay, we go over this chart quite often, and I tell y'all, notice that the best signals, and when the 21-day, the yellow moving average line, and the 50-day, the red moving average line, are both pointing up. Right now, you got the green pointing down, and you got the red pointing down. That's not the best signal. So this is starting to show a little deterioration. All right, it's starting not to look as good as it did once before. Well, we know that momentum is starting to come out. Now, this is the same differential chart, advanced minus the declining stocks, the differential chart, invisible chart, but this is for the Standard & Poor's. Notice that the green line is starting to point down. Look at the red line. The red line is now below zero and is pointing down. Okay. The best signals are when the green is above the yellow and the red, and above this horizontal zero line, right? That's the best signals. and when the red and the yellow is also pointing up with the green pointing up. Right now we got the green moving average pointing down, the red moving average pointing down, and the yellow is still pointing up, but that's not good, okay? That's not the best signal. So we start to see a little weakness. Let's go now and look at the NASDAQ and see what it looks like, okay? Let's see what the NASDAQ looks like, all right? The NASDAQ is got an even worse picture, okay? Look at the NASDAQ. Let's expand it and bring it in here. See the NASDAQ? Okay, the green line is above the yellow and the red, and it is above the zero line. That's why we got our green arrow to tell us that we can start buying right with the follow through day hit. We did do that. We made a little profit. We made a little money, right? But you see the deterioration as the stock market is now moving sideways. The green line is starting to point down. The red line has never really got going and started to turn up. Even after the green arrow came in, it never really got going. And look at the yellow line moving sideways. So we're seeing a little more weakness in our go-to chart here to tell us when we bouncing off a bottom. Okay, maybe that's why our weekly Bollinger Band strategy can't get going. All right, because we can't seem to get any traction. All right, so look, you see it. I don't have to go through beat a dead horse. The market isn't going anywhere. So what we'll do is just wait and let's see what happens tomorrow. But we're going to wait and see. We're going to do another video. I'll post it up early tomorrow morning. Okay. All right. Early tomorrow morning, I'll post it looking at our weekly charts and seeing where we're at. Okay. How do the weekly charts look and how does the weekly Bollinger Band strategy look? Are we there yet? As my son used to say, we go on vacation. Daddy, are we there yet? Okay. Are we there yet? No, we ain't there yet, y'all. Okay. So here's the DIA, the weekly chart. Here's the pivot right here. Okay. Here's the pivot right here. We ain't there yet. Okay. Bottom line, we ain't there yet. The stochastic is telling us things are starting to look a little better though. We closing higher and higher within the range. This is the weekly chart of the DIA with the Bollinger Band, but we ain't there yet. But we'll look at that later and analyze the major ETFs on the weekly chart just with the Bollinger Band and see what it look like. That'll be the next video. We do that. We'll post that up either late tonight or early tomorrow morning. So you can get a chance to take a look at it before the market opens. But we'll be updating everybody on everything moving until this thing pops. It's either got to pop or it got to drop. All right. See y'all on the next video. Hope everybody's doing well. Talk to y'all later.